G'day there everybody right around the world. You are here with James on behalf of Pivot Point Trading. This video is going out very close to the midway point of Wednesday's day of trade. It is relatively interesting. This is going to be a continuation off from really the video I posted over the weekend in relation to the divergence which was beginning to take place in regards to the NASDAQ and the S&P versus that of the Dow Jones Industrial Average. Now that divergence itself at this particular moment is still continuing to actually diverge. As you can see on my screen, if I just show you this on the weekly candle, obviously we have to get through the close of Wednesday's trade and then of course see what transpires on Thursday and Friday. But on the weekly look of this candlestick, this is what we call an outside weekly candle. It is that of an engulfing bearish Morobozu. Now, again, we have about 2.5 days worth of trade. So we're going to see how this closes as at Friday and its final sort of construction of the candle itself. But if this is to remain true as it is at the current juncture, this is a very bearish and very weak sell signal, a very strong sell signal in and of itself. It is the strongest of reversal patterns we have when we're looking, or at least incorporating 2 weeks. Again, if I go into the daily if I look more so on the molecular level of this particular weekly candle, you can see we're going through 3 days worth of trade. This is Monday's candle. This is an engulfing candlestick just here. We filled the gap first of all on Monday. We had a little doji candle on Tuesday, but even during today's trade, we're down 65 points as I record this video. So we have overshot the window. We didn't actually get all the way up to my target. My personal target on the market was 6,648. We fell short of that. There is still a possibility, of course, that we rally back up and potentially hit it. It would be interesting if that happens, because then that would begin to give us some additional sort of chart patterns, which we still don't have at this particular point outside of a couple of gaps which have now exhausted themselves and have filled as at the current juncture. So it is very interesting. Our biggest alert to this move, which was coming down the pipeline, so to speak, was that the ADX had definitively turned down. I've been speaking about this quite a lot over the past couple of weeks, telling you to take note of this signal when it does set up. And again, that sort of took place Wednesday, Thursday, Friday last week. And as you can see, we're seeing the first beginning sort of natural sideways consolidation, although it appears at this particular point to be that of, a pullback. Now, again, we can see the bounce take place. I think we're simply going to move sideways. At worst, we'll probably come all the way back down to the breakout pivot, which is down at 6,450 on my screen on the NASDAQ. But again, if I start bringing up these rising exponential moving averages, you can see that the 50 EMA is priced in at about 6,478. So we are getting pretty close to it. We have broken now the 20 exponential moving average. Last time we tagged the 50 was in the month of September, or close to the end of September. So it'll be interesting to see what happens at this pivot. It is also sort of aligning quite nicely with these couple of bars over here, which were very short-term resistance as well on the NASDAQ. But again, we're seeing a collection or a series of engulfing candlesticks, and it is suggesting further sort of weakness in the price action of the NASDAQ. I'll be recapping a couple of individual select stocks as well. But before I get there, let me just show you the S&P 500. You can see also on Monday an outside day candlestick. Again, this is what we call an engulfing type of candle. We had a very brief slowdown on Tuesday, but as at today and during Wednesday's session, we have definitively closed this gap over here. So this is looking like an exhaustion gap. We have seen these in the past that sort of haven't really turned into anything. We have to keep our eye very closely posted on this situation. It is sort of underway at the moment, but it is starting to show us that weakness. And again, that weakness is coming from, if I can bring up the right template, that ADX turning down. It is, of course, you can see just how close, how perfect it is when you see the tops of these trends, or when we get into trends that have sort of run their course or are very close to running their course. When we see the ADX up at these elevated heights, it doesn't stay here for all that long. And again, this can help you exit out of trends towards the end of the move, or if you want to take off a portion of your open position, it's always smart to do so. You can manage it with the ADX. It's a very powerful tool, and one that I personally use and talk about a lot in that pro analysis class. Now, getting back into the analysis, obviously as we pull back on these markets, you can see that these oscillators are starting to reset. This is good. This is favorable. So keep in mind that although the stochastics is turning down, although the RSI is now pushing into, or at least push below that neutral 50 line, and the MACD has given us that definitive sell signal, it doesn't mean that we're bearish. It just means that once again, we're moving into probably a stair-step consolidation with a little bit of volatility in between, which is going to be composed of market noise, which again sort of fosters that trading environment of potential whipsaws. So you want to be very selective when it comes to your individual trade selection. It's perfect at the moment because it is coinciding with a lot of our stocks which are reporting earnings, which I will speak about very, very shortly. But it is sort of a blessing at the moment as the markets are resetting. It is also aligning very well with earnings season, which for us is this particular week at the moment. Once we get through this week, we will have a blank slate to work with for this week's pro analysis class. Now, if I continue the discussion into the Dow Jones Industrial Average, you can see that this is the one market which, although it is relatively weak today, I mean, it's only down 108 points as I do this recording, it has still continued to the upside. I mean, if you just look at Monday's candlestick, although it was a dark candle, Tuesday we really saw follow through. Now, on Tuesday, a lot of these gains were to do with the Caterpillar earnings. Caterpillar had a really impressive day. It gapped from about 132. It opened at 140, but it was another bearish, sell candlestick. But again, a lot of the movements in the Dow on Tuesday were attributed to two particular companies, one of which were Caterpillar's earnings. Now, even if we fast forward to today, we have almost that of a one black crow. I mean, we'll see and we'll recap what happens at the end of trade today. But again, this is another sort of bearish candlestick which is developing on the Dow Jones Industrial Average. We still haven't seen that ADX turn down, but the Dow Jones Industrial Average is the most overbought it has been in the past 63, if not 64 years. So for me personally, I'm not touching the Dow Jones Industrial Average up at these levels. I want to see those oscillators reset. I want to see that ADX turn down, and to see that ADX reset, which is most likely going to coincide with the retest of either the 20 at a bare minimum. You can see on my screen, I've got this green rectangular box. That's still an open window, which is dating back to the 18th of October. So that's a potential target. But if we overshoot this and break the 20, then the 50 becomes that next sort of logical target on the industrial average. But I'm still, I still believe that the Nasdaq is going to be the market that sort of sets the tone for not only the S&P and the Dow Jones Industrial Average. Again, my target 6,648. We got very close to it. The high of this candlestick was 6,641. So we were 7 points. If you just pay attention to the high over here, 7 points away from my ultimate target on the Nasdaq. I still think we're going to get a last sort of gasp effort back up to this figure. And if we do, we'll have to monitor whether or not that starts to set up that of a sort of a double top or something on the markets, which is going to set up that of more so a sort of an intermediate correction, which we'll see it come down to lower levels in due course. But I'll update you on that, of course, as it continues to unfold. Before we get there, I just want to recap some of these tech companies. Again, Apple's still holding up around this 156 area. This is a non-trade as we move closer into earnings. Amazon is still pulling down or selling off, so to speak, back into earnings. Earnings is scheduled tomorrow, so that's going to be something that I recap for you in the private side of the analysis video. Boeing Airlines, I think, is reporting after hours today, so this isn't actually taking into consideration that of earnings based off that particular candlestick. Baidu is tomorrow as well, so there's no trade on Baidu at the moment. Two stocks in particular I want to talk about. Maybe I'll just cut straight into them. Is that of IBM and also Caterpillar, because IBM released their earnings last week and it gapped up. It gapped up considerably strong. That helped the Dow again continue its sort of parabolic rise. Over the weekend, we didn't have any bullish trade because the markets themselves are so overextended. That, of course, also applied to IBM. We actually had a bearish trade trigger down here, although it is counter trend at about 155.72. This was going to be, if we didn't see the continuation above this resistance area, we were most likely going to come back down and close this open window. So it looks as though IBM is trying its best at the moment to actually close this window down at about 146. So if you're in at 155.72, congratulations. I placed my stop above the high of more or less today's candle. We're going to have to obviously monitor what happens. But, just looking at the parallels between IBM and also Caterpillar gapped up on pretty decent volume, or very strong volume. But we're already retesting the lows as to where we were intraday on Tuesday. So it looks as though if we see further weakness in the markets, this is probably going to flow through into Caterpillar. And we could see Caterpillar actually come back down to about 132. And this will offer up a tremendous buy opportunity once we fill this gap and start to see, of course, some of those candlesticks show up again at those rising EMAs. So think about that. It's a trade which is forming. I wouldn't go out and short Caterpillar. I wouldn't look for a trade to actually close the window. It's counter trend. Again, earnings was relatively strong, so to speak, or at least it was bought. The response was overwhelmingly favorable or positive. So I wouldn't be looking to short this. Instead, I would be looking to play a bounce off from the window or to carry on above the high of Tuesday's candlestick. But as I look through the list, obviously we have a lot of companies reporting. Google is still tomorrow. We have Goldman Sachs, which reported a number of weeks ago, but you can see again, we've got an engulfing candlestick as at today's session with trailing volume as well, which is coinciding with this most recent bounce. The elevated volume spike was on the earnings, release on the announcement itself. So Goldman Sachs is looking weak, and this is what I'm sort of, in essence, trying to describe about the structure of potentially the market moving forward. This is the Nasdaq pulling down What I'm talking about is the subsequent bounce, which is most likely going to be off this 20, although we have broken below it. We can see more or less these markets turn on a dime, and that would sort of coincide with the Nasdaq running back up to ultimately my target, which may produce that of a double top. If I go back into Goldman Sachs, you can see that this neckline, which has just been developed, has come off that earnings candle, and that is laying the foundation for the breakdown trade if we see the reversal from this level up here. So we're going to have to see what happens with Goldman Sachs, but right now there are a lot of warning signals, so to speak, that Goldman Sachs is going to enter into some form of a decline moving forward. That's IBM on my screen. I've already spoken about that. And to conclude with, we have Tesla again releasing earnings very, very soon. It haven't been actually released at the moment. So we'll see what happens, the response to Tesla. If it's worthy, I'll recap it and I'll put it up on the private side. If not, tomorrow is when I'm going to release a lot of those earnings, or at least reference those earnings on the private side in that pro analysis class. So check in after close on Thursday. That's where it's all going to be housed, okay? Outside of that, everyone, I wish you a rest of trade for Wednesday. And I'll be back with you most likely also publicly tomorrow, if not again on Friday. All right. So on that note, I'll be back with you very, very soon. Enjoy Wednesday. Goodbye.